Do you have it?
Yep.
Okay.
Hello and welcome to the Cash Furnace. My name is Paul Kinzerski, and together with my co-host Eric Downs, we aim to become your go-to source for stock and crypto news. Today's date is February 11th, 2021. In today's podcast, we're going to cover preparing for the next SPY crash. In crypto news, we're going to cover Bitcoin futures looking grim, and we're also going to give you a Bitcoin Ethereum update. I have never been so bullish in my life. I'm going to explain why. Thank you for tuning in. If you like what you see and you want the news to keep coming, make sure to like, subscribe, and comment down below. Share it with some friends if you want. Help us run up that YouTube algorithm. So let's get started and let's make some money. Eric, SPY crash. Are we going to lose all of our money?
Yes.
Okay, I'm
All
on.
right. On to you, Polly.
So explain what you're seeing and
Okay.
why we need to be not necessarily concerned, but we need to take some precautions here and prepare ourselves.
Exactly. So I'm gonna do my best for all of our podcast listeners to explain this, without visuals as best I can. So what we're looking at right now is the the S&P daily chart. Each one of these candles represents one day.
Yep.
Now, as you can, I'm actually going to zoom out a little bit and give you a little bit of a context. We'll give you the last, last several months here. And what you notice, obviously, even since, the low of the COVID low, is we've seen largely a really solid, healthy uptrend.
Yeah.
Never overheating really. RSI never really going overbought.
Solid volume.
Yep, we'll push up for a little bit and we'll retrace a tiny bit, maybe hit our moving average as support and bounce back up. Yeah, and volume is healthy. So this is all these are all good signs, So let's take, if you look on the far right here, look on the far right screen, you can see the last few days, the last week or so. And I'd like to take a moment to compare what these candles look like and compare some of their other accompanying stats. Now, let's look at the candles, number one. As you and I know, Paulie, yesterday we saw a crazy flash crash early on in the day.
Yep.
That, again, we attributed to essentially, to our best guess, algos dumping shares.
Right. Because there was no news behind it, no anything. There was no coronavirus news. There was nothing.
Exactly. Mm-hmm. So you can see in that candle, the candle is basically very long. It's got it basically looks like a hammer in that it has sort of a solid block head and a fairly long wick underneath it. This indicates that the stock dropped down and then it was supported very heavily and pushed back up. Today, we noticed something. Oh, and actually, I should say this on that period as well. If we take a look down at our MACD, which is our moving average convergence divergence, this is basically a momentum indicator that can help us simultaneously track volume and sentiment or direction. You can see that, as of what was it? Was that just late last week? We crossed over. Our volume crossed over. Our sell volume waned off. And we flipped over to green buy volume.
Mm-hmm.
Great. We love to see that. It's typically a good indicator that we're about to experience our next upswing. Now, if you look really closely, again, this is on the bottom bar of this chart here. The brighter the color is, basically the brighter green that we see here is basically sort of the ascension of the uptrend, and the darker green is when you have a pullback from a high, when that day's volume is lower than yesterday's. It
Right.
indicates that
I like
to
to think of it as the intensity of the movement of the volume. Yeah.
Sure, you could think about it that way. That's a good way. So you can see yesterday we had a nice, it wasn't massive volume, but it was, a bright green bar here. Today we have similar volume, but you can see it's ever so slightly less. And our accompanying candle is essentially the same shape as yesterday, but basically with a smaller, a shorter hammerhead.
Mm-hmm.
And what that indicates is essentially very similar sentiment to yesterday. That is, we're seeing sell volume, we're seeing sell side activity starting to become active. Because let's face it, we've popped up here, we've taken a nice run upward. The natural thing to do is to sell off some of the excess, consolidate and then move on. And basically, what I feel like we're seeing here is I feel like we're on the cusp. And if I'm being honest, it's hard to say for sure exactly what's going to happen. It's going to be a massive crash. No, I'm not necessarily. But we're seeing the sell side volume trying to take over, trying to push that candle wick down, and it's getting supported. That's not bad. But if our overall our MACD is basically sort of arcing downward and trending back towards a negative, it may indicate that we're going to go sideways and down a little bit, and until we possibly hit some sort of support, generally, our moving average.
Right.
Now,
so go ahead.
No, well, go ahead. Yeah.
Well, I'm just saying there are some cracks in the wall. There are some chinks in the armor that are showing
Yes.
here, right?
Yes.
So it's not anything to panic over, but you can basically position yourself in a way where you can benefit from this downturn. And I think that's where you were going next.
Yes. And
Yeah.
before I do so, I would like to, I'd like to note, take a look at the last year. This giant stairway or to a ladder down was our COVID crash, right?
Mm-hmm.
And as we moved our way up, a lot of times you'll see the major corrections, the big movements, come after we pushed just a little too hard. We ran up a little too fast. You take a look at this first push up near, what is that? Coming on May and yeah, about halfway through May. Look down on some of our indicators. You'll notice it was the first time that our RSI had gone overbought. You can see it down here,
Right.
where my mouse is. When it crosses up over this line, it turns red, and that indicates that the market abroad sees the S&P 500 as overbought. It's time to correct. And what happened? It corrects. Okay? We move up again. We see the exact same thing at the end, in mid-August. It runs up super hard. And this happened to be when SoftBank was manipulating the market. But it pushed up way too hot, way too fast, just more than was sustainable. And what do we see below?
Same
Red
indicators.
RSI.
Yep.
It's overbought. And so what happens? We get a big dump down. Ideally, in a really sort of comfortable, stable market, we see all the SPY candles sort of moving upward with RSI staying high but not overbought. And we're staying between the mid and upper band of these Bollinger Bands.
Yep.
That's a really, really nice environment to be in. It's
right.
it's relatively it's not as volatile and it's more predictable. So what do we see here? How does that compare to where we are now? Well, look down below. We're not overbought. I'll give us that. And we haven't really pressed up outside of these Bollinger Bands necessarily.
Right.
So, are we going to see anything? That's why I don't believe we're going to see anything drastic.
Right.
However,
I would agree.
in the event that we do see any sort of pullback or even sideways movement, the best way that you can take advantage of this is not necessarily, if you have any really, really, really short-term positions, yeah, it might be a good idea to maybe close them out even at a loss and wait or reposition.
Right.
I'm mainly talking about short-term expiration options buyers. But on the other hand, there are several investment or trading tools that you can use to profit or hedge when the market goes down. We were discussing one of these today in the chat, and that is
UVXY.
basically, I guess it's an ETF. It's not an ETF. It's not an ETF. What are these things? It's a I don't really refer. UVXY. What is that referred to as? It's not an.
There is a specific name for it. It's basically it profits off the inverse of whatever SPY does. It's
Right.
I don't
Even
I don't
more
know the technical term.
so even more specifically, what it does is it tracks the VIX.
Mm-hmm.
If you're not familiar with the VIX is very in layman's terms referred to as the fear index. Um, and the VIX is basically forward-looking project and reflective of what the market projects as forthcoming volatility. And 9 times out of 10, when the market goes, when S&P goes down, the VIX goes up.
Right.
However, there are times when the market expects a lot of volatility, or is experiencing volatility upward, that the VIX can rise. It's technically VIX stands for volatility index.
Right.
It's not fear, but it kind of operates as the fear index. So UVXY tracks the VIX, and then it multiplies it by 3. So
So it's a
basically,
leveraged.
it's a
Right.
leveraged tool. So what you can do if you have a little free cash on the side and you're concerned that you might see a pullback, you can buy some UVXY, or if you're a real degenerate, you can buy UVXY call options. And if and when the market pulls back a little bit, you can hold on to your positions, let them go down a little bit. But in the meantime, UVXY is going to be generating cash for you. And when you think we've hit support and sort of stabilized and consolidated, you can sell that UVXY and use that cash to buy in for the next leg up.
Just a quick correction. It's not a triple leveraged. It's 1.5 leveraged.
Oh, what's the triple leveraged one?
I'm not sure. I've never dealt with it because I don't have the balls.
Okay, well, fair enough. Well, Paul, do you have any questions or anything to add about this topic?
Um, no, I just want to clarify for anyone who's listening or watching what a hedge is. So,
Ah,
a hedge essentially, you don't put a ton of capital in a hedge, right? Well, I mean, I guess you could if you really see the potential of a market downturn. But what a hedge is specifically is when you believe the market is going one way, but you have a little bit of uncertainty, what you do is you take a small position of the cash in your portfolio and you basically allocate it towards that opposite mindset of where you think it's going to go. That way, in case it does drop, in our case, right? If the market does go south, we don't lose all our capital. We actually wind up making some. So it protects your investments a little bit, even though you may lose money if the market continues going the way you're hoping it's going, the way you're betting it's going with the vast majority of your account. If it does go south, you don't bleed as bad as you would if you didn't have a hedge. So,
right. I mean, the really easy way to think about it is it's an insurance policy.
right.
You know,
That's a
just like you
great
pay
great
for
way to put it. Yeah.
you pay for insurance on your car. You pay it every month.
Mhm.
Nothing really happens. But in the event that something does, you get in a car crash, you know, you're covered.
Right.
And that's it offsets the weight of the negative weight of that
Right.
crash.
Takes a
So,
little bit of pain out of the equation.
yep. And it's a very common strategy for many experienced traders is to maintain a hedge because you always want to it basically allows you to sort of profit in both directions and protect your capital.
Right, right. And as every trader knows, you are never right 100% of the time. So having a hedge, a small hedge in your portfolio is always a smart idea.
Yep, I totally agree.
Yep.
All
So that
right.
yeah, is that it? That's it for our SPY coverage.
I think so.
I think it's time to move into crypto. So
Please, the screen is yours.
one of the biggest news pieces for the day that I saw, if you're tracking some Bitcoin metrics, is actually that the futures for Bitcoin isn't that optimistic, surprisingly. So right now there are many options contracts, or many futures contracts for December 2021, going all the way up to 400,000. However, the amount of futures that have been taken that people have bought for 100,000 or over is only 12%. So only 12% of traders out right now believe that by December of this year, Bitcoin will hit the 100,000 mark,
Hmm.
which is
Interesting.
surprising, right? Because we
Yeah.
just saw this recent Tesla bump. We're already at 50, which I know it sounds weird me saying already at 50. We still have to double this price in
Yeah.
order to get to 100,000. But I wanted to talk about it because a lot of people will play off of what futures contracts are predicting. And a lot of times, future contracts are wrong. A lot of times, people don't see what you're seeing personally as an investor, or they don't see, they're just not connecting all the dots. And I brought it up specifically today because I looked at the Bitcoin chart and I have never been more bullish in my life than after today. And here's why. So if we look at the Bitcoin chart, right, and we draw a line of resistance from the past previous 2017 all-time high to the last all-time high that we just had, that is essentially the highest point of resistance that we can have, right? They're the two tops. It's the biggest psychological ceiling that we have to break through. Now with the Elon Musk news and Tesla buying Bitcoin, we absolutely blew through that, which happens sometimes when you have a resistance. But what'll also happen is it'll pop up and it'll come right back down through that resistance and get stuck under it again. However, what happened with our most recent sell-off over the past couple days is we dropped down, we hit it perfectly, literally on the nose, popped back up, dropped down one more time, hit it again perfectly within today's candle, and popped right back up again. So this huge resistance line has all of a sudden flipped to support. And I cannot describe how bullish of a sentiment that is, for me at least. This is Bitcoin to 50, 60K, not within the month, within a couple weeks in my mind now.
Wow.
Yeah, this is absolutely huge. This is, to put it into perspective, I may be convinced if we continue to see this pattern continue on and this resistance get turned into support, you might have me convinced that the 4-year cycle is over when it comes to Bitcoin.
Really?
Yes.
Okay.
Yeah,
That's a bold statement.
that is, right? And now I'm not entirely convinced of that yet. However, this is such a strong indicator, and this was such a hard ceiling to break through and create support that it's just an incredibly bullish thing. I haven't felt this way since I first got into Bitcoin at like $800.
Wow, Paul.
Yeah,
That's a bold statement.
yeah.
Okay.
So I mean, there's not much more news for me to
What,
go off of, except for the
Paulie,
fact that, yeah, go ahead.
could I actually bring something up unplanned?
Yeah.
So our friend Will, who all of our dedicated viewers will remember we had on the podcast on, was that Sunday? Just Sunday?
Yes.
So my friend Will shared an interesting little chart and metric with a group today concerning Bitcoin's halving schedule and its performance based around its halvings. And I was wondering if I could share that with you.
Absolutely.
All right. Let me I want to bring it up. I want to get your live reaction. Folks, this is as raw as it gets. I'm about to surprise Paulie. Wait, he has no idea what to expect. This is going to knock him on his ass. If I can figure out how to show the thing. Oh boy. This is not going smoothly. This is not hard to do. What the heck? I did it earlier in the episode. All right, hang on. I'll find a good way to do this, or maybe I can just find the chart on the interweb. No, I can't. Okay, here we go. I have another solution, and I am engaging solution. Oh my God, this is really. I'm really biffing this one, buddy. Okay. Oh my God. Okay, hang on a second. I just need to share my screen because I just did something so stupid. It's worth sharing. So it's in our chat, right? It's in our iMessage. And I wanted to, and I can't, for some reason, I can't share the iMessage application window. So I was like, cool, I'll just save the image. And how can I show, what's the quickest way to show the image? Well, I happen to have Photoshop open. And I was like, cool, I'll just drag it into Photoshop and zoom in. And we'll do that, right? Well, somehow I dragged this. What the hell? What the fuck? Okay, I'm gonna try this again. And because it's worth it. I know this is a bunch of really silly nonsense, but this is worth it if I can get this to work. Which, good Lord. Guys, just bear with me. I mean, this isn't a technical difficulty. This is just, I'm just really
an Eric difficulty.
I'm pretty dumb.
Oh God.
Okay. Okay. Maybe I can add this to my, or maybe what can I? I'll put it on the desktop. Can I put it on the desktop? Why can't I figure this out? I used to work at Apple. This is unbelievable. Okay. Whoa. There it is. Oh my God. It looks horrible. Oh my God. This is so unprofessional. This is absolutely horrible. Why does this look so bad? You can't even read it.
I really can't. You're right. All right. Describe what we're seeing here. I have a general idea.
So basically, God.
The yellow line, I'm guessing, is where we currently are today.
Hang on. I can do one more. This will work. It's just less elegant. There we go. Okay, can you see this?
A little bit. Hold on. Let me make it full screen because I still can't read.
Well, how come? Why? Look, I'm hitting spacebar to quick look this thing, and this comes up. I don't even know what that is. That's never existed in this chat. Okay.
Okay, I can.
Ooh, open with. No, that's not a good idea. Okay, here we are. So, what we have is the Bitcoin halving price index, and these you see these different lines, red, white, and blue, of course, because America. The first halving is represented by the blue line. Okay, and this is November 28th, 2012. The second halving is represented by the red line. This is July 9th, 2016. The third halving is represented by the white line, which is scheduled to be on May 11th. Oh, no, sorry, not scheduled to be, which was on May 11th, 2020.
That's right.
Now, I'm curious, Pauly, if this chart speaks to you in any way, and if the performance after a halving is indicative of anything to you.
Oh, absolutely.
What do you see?
So every time after halving, we have this brief period where everybody's like, that's it. The halving happened. We're not going up again. It's over, right? The Bitcoin cycle has been broken. We're never going to see the 10x again. However, it's happened again and again and again, right? And right now, what I'm seeing on this chart is only a 5.2x compared to where we were before, right? Now, yes, we are going to have smaller and smaller multiples after every single halving, right? Because more and more people are already bought into the asset. It's not really priced as low as it's not really. It's not as priced as it used to be. It's just the way of the world, right? You're not going to continue to get the same insane gains as you would when there's no money in it. So, what I'm seeing here is we still have a long way to go to the end of this halving. Now, I don't use this chart. What I use is, it's a parabolic chart. And I sent it to the chat a while back. And you guys said, what kind of math doctorate do I need to read this?
Well,
right?
yeah, I thought it was one of Galileo's, diagrams of like, God knows, man. I don't know if it was that Descartes, a Cartesian map of like 17th century Earth. I have no clue, man. There were more lines on that chart than, oh
Yep.
God. I
But
really
the
don't have a good
the
analogy.
biggest thing to take into account on those charts are the parabolic curves that come out of it, right?
Yeah.
And we are still only a quarter way up for our current parabolic curve. We still have a long way to go.
Right.
And what the curve shows, which has hit perfectly every single time. And again, every time somebody says, well, this is the time it's not going to work. But so far, according to history, and history likes to repeat itself, it has worked. And the chart shows us going to right around the 280 to 340 mark at the end of this cycle.
Damn.
Yeah. So, and I just mentioned that because of this ceiling that's now got flipped into support, I think because of all the institutional money that's flowing into this, I think we may see the end of the curve downwards.
Wow.
The massive retracements coming from it. Because again, this is no longer just retail driven. It's not even retail driven, period. This is big money in there. These are not weak hands in there. They're not going to sell off at a 20% drop if we shoot all the way up to 200K. It's not going to matter anymore. And I think this ceiling, this push through, without the massive drop coming back under that really, really heavy ceiling, I think that's kind of proof of it. That's why over the next couple weeks, what I want to see is this support continue and Bitcoin continue to shoot up at this ever increasing rate. So that chart kind of only validates my opinion in at least in my mind. I still think we have a long way up to go, and then we're gonna see if the institutions are gonna hold once we're up there.
I have another question for you.
Go ahead.
And I think it's a good way to close the episode.
Okay.
Unless you have anything more.
Nope.
I should know. It's a thought experiment. It harkens back to a discussion we had on on several episodes ago. Paulie, if your predictions are right, and we end up above 200, 300K maybe,
Mm-hmm.
what are you going to do?
The same shit.
The same shit?
Yep.
Really?
Maybe I'll think about quitting my job.
Maybe you'll quit your job. Are you going to
Maybe.
buy anything, dude? What would you do? What are you going to do with that much money? Do you have any plans?
No, because I'm trying not to make myself too hopeful. I have these crazy predictions. I get excited. But I've also lived through a lot of pain when it comes to crypto, right? Crypto's a bitch. She'll bring you up to those higher highs than you've ever known, and she will absolutely trash your ass to lower lows than you could possibly think.
Okay.
In March this year, I thought, hell, the stock market's going down. This is crypto's time to show that it's decoupled from the stock market. We're going to shoot to the moon. What happens? We drop all the way down to
4,000.
4,000, 3,800 and some change.
Wow.
And I saw my net worth just fucking tank, right? And I was thinking, I'm like, shit, do I sell out now? Like, is this over?
Mhm.
And we are going to have moments like that where everybody thinks this is the end, man. This is the end again. So I try not to get too hopeful. I haven't even begun playing with thoughts like that because it would just get in my head. But
All right, fair
I
enough.
don't know.
That's
If
a,
we hold at 200 for, I don't know, a while, then I'll think about balling out maybe a little bit.
I would I would like to reapproach this topic on a continuing basis because
Okay.
I want to know if you really hit it big and it stabilized up real high. I want to know what Paul Kinzierski would splurge on.
Okay.
Doesn't have
Well,
to be now.
we'll see. We'll
I want to
see.
figure. I want to see. I want to
Yeah.
figure it out for myself. I don't know what I would do.
Tell you what, when it hit 28K, I bought myself a nice drum set. So
See, okay,
we'll
now
see.
we're talking.
We'll see if it's something a little more extravagant than that, but
All right,
probably
all right.
not.
Okay.
All right. So on that note, everybody, I want you to comment. What are you gonna buy when Bitcoin hits $200,000?
Please.
And on that, you know what to do. Like, send your comment below, subscribe, and let's keep making more people more money.
That's right. Cash
Until
Furnace
tomorrow,
out.
Cash Furnace out.
And we're off.